Okay, let's just be honest for a second. The financial news, it's basically a foreign language. We've all seen those flashing headlines about trillions in debt, wild exchange rates, impending trade wars, and honestly, it usually sounds incredibly intimidating, right? It's almost like it's a language specifically designed to keep us all a little confused. But today, we are stripping all of that away. We're going to take these massive, intimidating global concepts and break them down using simple, everyday analogies so they finally actually click.
So here is our roadmap for this explainer. First, we'll look at the true value of money. Then we'll figure out who really pays tariffs. Third, the actual truth about national debt. And finally, how real wealth is built over time. By solving these four mysteries together, I promise you, by the end of this, money is going to make a whole lot more sense. Let's dive right in. All right, section 1, the value of money, from paper to apples. We're talking about that literal paper in your pocket right now. Now, this is a question we've all probably Googled at some point. Why isn't one US dollar worth exactly the same as one British pound or one Japanese yen? I mean, at the end of the day, it's all just paper or just numbers on a screen, right? It seems totally random that these exchange rates bounce around every single second of the day, almost like someone's just pulling numbers out of a hat. But it's actually not random at all. It basically comes down to a constant, massive global vote of confidence. Think of it like this. Holding a US dollar is essentially placing a bet on America's economic stability. When a country's economy is booming, they're creating jobs, building things, bringing in business, more people worldwide want that currency to buy those goods. That high demand, it pushes the value right up. But if an economy is struggling, trust just evaporates. People sell off the currency and its value completely tanks. A really staggering real-world example of this is Venezuela. Back in 2018, trust in their economy completely collapsed, and they hit a mind-blowing 1,000,000% inflation. Seriously, a cup of coffee went from costing 2 bolivars to 2 million bolivars in just a single year. It's wild. And this is exactly why a struggling country can't just, fire up the money printer to fix their problems. Imagine a tiny, isolated economy. There are exactly 10 people, 10 apples, and $10 total in this whole economy. Supply and demand are perfectly balanced, so each apple costs $1. Now imagine the government decides to just print 10 more dollars and hand them out. Everyone feels rich for a second. But wait, there are still only 10 apples. So the apple sellers realize there's way more cash chasing the exact same amount of fruit, and they just raise their prices to $2 an apple. Printing money doesn't create wealth. It literally just divides the exact same pie into smaller, much more expensive slices. You aren't richer, your money just got weaker. $35 million. Yeah, you heard that right. That is what a single loaf of bread cost in Zimbabwe in 2008. Reckless money printing completely wiped out their citizens' savings. When you print cash without creating actual real-world value, you just get the illusion of wealth while literally everything around you becomes totally unaffordable. Okay, moving to section 2. Who really pays tariffs? Let's talk about the border toll booth and strip away all that political jargon around trade wars. So you turn on the news and hear the government is slapping a 25% tariff on foreign steel or foreign electronics. It sounds super tough, doesn't it? It sounds like we're directly punishing a foreign country and forcing them to write us a massive check. Well, actually, scratch that. That is a massive misconception. That foreign country, they don't pay a single cent directly to our government. Not one. Think of a tariff as a hidden tax that you end up paying right at the shopping cart. Let's say a local company imports $1,000 worth of foreign steel. The government essentially sets up a toll booth at the border and slaps a $250 fee, that's the tariff, onto the importing company. Now, the foreign supplier, they still get their $1,000, but our local company has a really tough choice. They can either just eat that $250 loss, or they raise the price of the cars or washing machines they build with that steel. And guess what? Almost every single time, they pass that cost right down the line to us. It flows straight from that border toll booth right out of your wallet. Which brings us to section 3, the truth about debt, the household IOU. It is definitely time to demystify those terrifying trillions in debt headlines. Okay, America owes roughly $36 trillion. The UK owes trillions. Japan owes trillions. If literally every major global power is supposedly up to its eyeballs in debt, who on earth are they borrowing from? I mean, are there space aliens lending us cash? The actual answer usually completely surprises people, because countries mostly owe this money to each other. And, get this, mostly to their own citizens. To really wrap your head around this, you just need to know what a bond is. Whenever the government needs to build highways or fund hospitals, they don't just print cash, right? We already learned why that's a terrible idea. Instead, they borrow it by issuing a bond. And a bond is literally nothing more than a standardized, highly official IOU. You lend the government $1,000 today, and they promise, hey, we'll pay you back $1,200 in 10 years. They get the cash they need right now, and you get a nice, safe return on your money later.
So that massive, scary mountain of national debt, it isn't just some financial black hole. It's actually financing retirements. Your parents' savings bonds, the pension funds managing huge retirement accounts, and yeah, other countries who just want a super safe place to park their cash, they all hold these IOUs. The national debt is basically millions of lenders spread all over the globe. And here is the real secret. Governments don't ever pay it all back at once. They just issue brand new IOUs to pay off the old ones. It's a cycle that works absolutely flawlessly, just as long as that global trust holds up.
All right, our final stop, Section 4, How Real Wealth is Built. Farming versus racing. Let's pivot to you and how you can actually grow your own money. People toss around the words trading and investing like they're the exact same thing, but they are entirely different universes. Trading, that's like drag racing. It requires frantic speed, constantly staring at charts, sweating over short-term price swings minute by minute. And the brutal truth is, over 70% of day traders lose money because perfectly timing the market is basically impossible. Investing, on the other hand, requires the calm, boring patience of a farmer. You plant a seed, meaning you buy a tiny piece of a real, functioning company, and you let it grow over years and decades. You're profiting from the actual tangible growth of a business, not just trying to catch a lucky blip on a computer screen.
And this is exactly the philosophy championed by Warren Buffett. His whole mindset is brilliantly simple. Buy great companies, hold forever. That exact mindset is how he built a $130 billion fortune. He consciously chose the calm patience of a farmer over the impossible, stressful task of timing the market like some frantic drag racer.
Now, I know what you're thinking. What about crashes? What if I lose everything? And yes, it's absolutely true. The stock market crashes. But look at history. Despite utterly terrifying drops, like the Great Depression, the 2008 financial crisis, the 2020 pandemic, the market always recovers and hits new all-time highs. Why? Because the market isn't a casino. It's a relentless tracker of human progress and ingenuity over time. Companies are constantly innovating, adapting, and growing. To really prove the power of this patient farming approach, just consider this one fact. If you had patiently invested just $10,000 into the S&P 500 back in 1990, if you just parked it there without picking any individual stocks, without any frantic trading, without touching it at all, you know what you'd have today? Over $230,000. 230 grand. Time in the market will absolutely always be trying to time the market. Okay, let's bring this whole thing together. Currency value isn't random math. It's a massive global vote of trust in an economy. Tariffs aren't punishments paid by our foreign rivals. They are hidden border toll booths that are ultimately paid by you at the cash register. That super scary national debt? Really, it's just a globally trusted system of IOUs that helps finance retirements. And real wealth building is a slow, incredibly patient game of farming, not a frantic, risky drag race. These hidden financial systems affect your life every single day, and stripping away all that confusing jargon finally puts the power right back in your hands.
Look, understanding how all of this works might not magically make you a billionaire overnight. But blindly navigating these systems without understanding them, that is absolutely costing you money every single day. So I'm going to leave you with this provocative thought to chew on until our next explainer. Who really profits when you stay confused about your own finances? Keep asking questions, keep looking past the jargon, and I'll see you next time.